What is value investing? Value investing is a popular investment strategy that involves buying securities that appear to be undervalued by some form of fundamental analysis. Here's a breakdown of the key concepts and principles. Intrinsic value. At the heart of value investing is the belief that every stock has an intrinsic value. This intrinsic value is what a company is truly worth, based on its fundamentals such as earnings, dividends, and growth rate. Value investors seek to determine this intrinsic value and compare it to the current market price of the stock. Margin of safety. Once the intrinsic value is determined, value investors look for a margin of safety before making an investment. This means they want the stock's market price to be significantly below its intrinsic value. This margin provides a cushion against any unforeseen negative effects or miscalculations in the intrinsic value estimation. Long-term focus. Value investors typically have a long-term investment horizon. They believe that over time, the market will recognize the true value of the undervalued companies, and their stock prices will rise to reflect their intrinsic value. Fundamental analysis. Value investors spend a lot of time on fundamental analysis, which involves examining a company's financial statements, understanding its business model, competitive positioning, and overall industry trends. This helps them determine the company's true worth. Contrarian approach. Often, value investors go against prevailing market trends. They might buy stocks that are out of favor in the market, believing that the market is overreacting to short-term news and that the stock's fundamentals remain strong. Dividends. Many value investors prefer stocks that pay dividends as they provide a steady stream of income and are often seen as a sign of a company's overall financial health. Quality over quantity. Value investing isn't about finding cheap stocks. It's about finding good quality companies that are trading at a discount to their intrinsic value. This means looking for companies with strong management teams, competitive advantages, and solid financials. Patience. One of the hallmarks of value investing is patience. It often takes time for the market to recognize a company's true value, so value investors must be willing to hold onto their investments for extended periods, even if they don't see immediate gains. Let's take a look at some of the prominent figures. Firstly, Benjamin Graham. Often referred to as the father of value investing, he wrote the seminal book, The Intelligent Investor, and was a professor at Columbia Business School. Warren Buffett, perhaps the most famous value investor. Buffett was a student of Graham and has applied value investing principles to amass one of the largest fortunes in the world through his company Berkshire Hathaway. In conclusion, value investing is a disciplined approach to buying stocks. It involves thorough research, a long-term perspective, and the patience to wait for the right opportunity. While it's not without risks, many investors have found success with this strategy over the years.